Welcome to the On the Entrepreneur's Journey, the show where we explore how leaders build extraordinary companies that grow, scale, and increase in value without the usual chaos. I'm your host, Peter Santry. Today, my guest is Ryan Baird, CEO of Baird Augustine, a fast-growing cross-border investment bank that's doing things differently. Ryan and his team operate in three distinct areas. They help startups connect with institutional investors, and they acquire and grow legacy businesses, and they generate outlier returns through their asymmetrical alpha hedge fund. In this conversation, Ryan shares what led him to start Baird Augustine in 23, how they scaled from 0 to nearly 100 people, and what he looks for in the companies they choose to back. It's a compelling look at leadership, capital, and what it takes to build a modern investment bank from scratch. So welcome to the show, Ryan.
Thank you. Good to be here.
Good. Well, let's dive right in. Um, so it's 2023. There's a lot of stuff going on in Silicon Valley. There's a lot of disruption in the banking sector. So what prompted you at that time to start Baird Augustine, and what was the gap that you think the market needed you to fill?
Yeah, that's a great question. So, I had actually been asked by a number of family offices to be introduced to various investment banks, and I made those introductions, and I thought they were going to be served well, but the feedback I got is that they were being treated very transactionally. And I was shocked because when I was at Morgan Stanley right here on Sand Hill Road, we were very much a relationship-based culture. However, I've been witnessing Silicon Valley as a whole becoming more transactional. If you go back to the birthplace of Silicon Valley at the HP garage, Hewlett Packard was very much a relationship-based culture. And they were a relationship-based culture because they needed to achieve huge, huge accomplishments. And Jobs had an internship at Hewlett Packard. Wozniak worked for Hewlett Packard. Apple was very much a relationship-based culture when they first started. And all of the other Silicon Valley companies copied them. However, as we've been watching these Silicon Valley companies become multi-trillion dollar businesses, it's just extremely difficult to maintain that relationship-based culture. Imagine you're at a company that's now 30,000, 40,000, 50,000 people. It's just very difficult to remember everyone's wife's name, let alone remembering your own employees' names. It's difficult to remember if their kids are in college or if they're younger, right? All these things are difficult to keep track of when you have tens of thousands of people at the business. So we've seen Silicon Valley become more transactional. We've seen investment banks become more transactional. And I think that gap has left a very wide space for relationship-based firms to thrive.
Right. And during that time, I think Silicon Valley Bank was running into problems, and you were, there was a little bit of a void there because I know they had done a lot of traditional, more relationship type banking at that time as well. Did that create an opening for you as well?
I don't really view Silicon Valley Bank as much of a competitor. We're much more an investment bank than a traditional bank.
Right.
But I think a lot of those teams from Silicon Valley Bank, they still exist. They're just at different organizations now. Um, I think the opportunity for us is really more because of the industries evolving and being public and having to meet quarterly earnings. And eventually that just turns companies to becoming more transactional than relationship focused. And that's really the big advantage I think that we have. I see a lot of other investment banks, they're reaching out to founders and trying to shake them down for $100,000 retainer or whatever. We really like to work with family offices and portfolio managers and have a good relationship with them, and then they'll point us to their portfolio companies where we should be going. And I much prefer that strategy than spamming everybody and trying to work with them.
Right. Right. So your positioning and differentiation is more on the investor side in terms of going where the capital is and using that to be the wedge or the entree into the corporate clients that you provide capital introductions to or raise money for.
Hmm.
So that's great. So it's 23. We're in the middle of 25. It's only 2.5 years later, and we've gone from Ryan and another co-founder or two to 100 people. So how did that happen? And how were you able to find the people? What was the hardest thing to get up and running? And I'm sure maintaining culture, all the things that you have to do to have a cohesive firm. That's explosive growth. Let's face it.
Yeah. Um, that's a good question. I mean, we've only been an investment bank for a couple years, but we've been building relationships in Silicon Valley and globally for decades. So the way we were able to scale is we had access to, family offices that were deploying over $20 billion this year alone. Now that number next year, is going to be much, much, much higher. So we just have a lot of different things that we need to get done. And because we have this access to capital, we were able to hire and scale our company. It's definitely not easy. There's a lot of one steps forward, one step back kind of thing. But the idea is that we just keep iterating and learning and growing as a company. I always tell people, look, we're not going to be perfect. We're going to be making mistakes. But I can promise you that we're going to learn from these mistakes and continue to improve our processes as an investment bank.
Right. So, you know, look, scaling is never a straight line. And so far, and really, it's the firm's brand new, but um, I know from my own experience, hiring people can be very difficult. I've hired 3x the time C players to every 1A player I've gotten. So tell me about that, and then tell me how you created a culture that is or found people to fit the culture that you wanted to have at the firm as the founder.
Yeah, I think a lot of it is I'm always pitching the firm, and occasionally we'll meet people that we believe are relationship builders.
Mhm.
And when I notice that someone is a relationship person and they're not, transactional, that's very attractive to me. So when I do find these individuals, I'll start prospecting them myself, tell them about myself, learn more about them, see if it's going to be a good fit. And if it seems like it's a good fit, we'll try to hire them. Obviously, there's a lot of people we've talked to that we thought would be a good fit and we just couldn't get them over the line. But I think that's just part of the process.
Mhm.
If everyone's saying yes to you, then you're probably not seeking high enough level people to joining your firm. Um, but if everyone's saying no to you, then you're not scaling. So you got to find this in between balance. And I look at it in a few different ways. I feel like we need to get people that have a ton of experience. That's part of the recruiting angle. So we're looking for people that have had C-level roles in previous companies, especially if they were at publicly traded companies. So there's that side of the recruiting. And then there's, giving younger people a chance and training them. And, we don't have infinite time, so this is not a huge part of what we do, but this is definitely part of the way that we are scaling is training people internally. And then lastly, we have our internship program where we give interns access to all of our business units, the hedge fund, the investment bank, our investor groups, and from there, we really try to find, future uh, analysts or employees from that group set, and and those three pillars combined is something that we're always working on and working on making better. But that's how we've been scaling.
Yeah. And I think, if you do define a culture, it's going to attract some people and it's going to repel others, which is
Yeah.
what it's there to do because, not everybody's going to get galvanized or agree with your core values or where you're taking the firm. And it's a nice, it's doing what it should be doing, if people are saying no and people are saying yes. That's kind of the
Yeah.
good thing. Um, Talk to me a little bit about the leadership team part of it. You came in with a co-founder, I believe,
Yep.
and then you started. You've got the three legs of your business. Um, how did you identify the senior people that you brought into the company?
Yeah, I mean, I've been very fortunate that I've been able to invest globally. So I got to meet a lot of people in the cross-border investing space. And I think by meeting so many people, you get an idea of who you want to be working with and who you want to be making money with. And, Henry Augustine is someone that I've known for years, and we had tried to work together multiple times in the past, but it just didn't quite work out. And, this is one of the things where all the stars aligned and we made it happen. So I'm not sure if I'm answering your question clearly, but basically, it was speaking with a lot of people with different ideas to start different projects. And this one just aligned really, really well. And I think since we both have deep networks, um, and deep networks in different areas. I'm very strong in Silicon Valley. He's very strong in other areas. I think our networks really complement each other and allow us to accomplish big things.
Okay. And in terms of your roles at the company, how did you divide them, or when you came together, you saw that you had complementary skills? And was that something that, or how has that worked out in terms of what do you take of the firms? Are you more outside facing? Is Henry more internally facing? How does that work?
Yeah, so I run the front office, the revenue generating side of the business, and Henry runs all of our middle office. And then we have our CTO, Will, who runs our back office, basically starting, various projects that could be generating revenue in the future. And that's how we break down our investment bank.
Okay. I gotcha. I gotcha. All right. So fast forward, you're cooking along. You got now, several teams, three businesses. So how has your role changed? Oftentimes I run into startups and everybody's wearing 10 different hats. Um, what does your hats look like now, and how has it changed since the beginning? Or what hats are you wearing now, I should say?
Yeah, I mean, at the end of the day, I'm quarterbacking a lot of the different projects that we're working on, but not necessarily running all of the projects. So, being able to delegate and have people on your team that you can trust, is extremely important. How my role has changed, it's really been listening to the family offices that we've been working with and, when their investment thesis changed from investing in lots of different funds to doing more private credit, we adjusted our strategy and we've been doing a lot more debt this year than we anticipated, just because that's where the family offices are looking to deploy capital.
Great, great. Okay, and which gets us to the next question, and this is something every entrepreneur that wants to go to the market needs to answer. So, what are the things that you look for? I'm sure you get inundated with companies that want to raise capital. And what are the must-haves, and what's disqualifying for you as you decide whether to take on a company or throw them back to work on themselves so that they can become investable.
Yeah, I mean, we're really looking for repeat founders. We don't have infinite amount of time, so we really want to make sure that if we're raising capital for someone, we have a high chance of receiving a success fee.
Hmm.
And um, when there's an entrepreneur who's already sold his company for over 100 million, it's just a lot easier to get meetings and get investment because you've already proven that you are able to execute. That being said, if someone comes through our network, we will be open to working with them. We call our service corporate development as a service. So oftentimes founders will come to us and they're just not quite ready to raise capital. And we'll go out there and help them get earned media, or we'll help them recruit, or we'll fix their data room and deck to make sure that it's clear to institutional investors. We'll work on their pitch to make sure that they can not only raise capital but also recruit and get earned media. It's all connected in my eyes. But it really is dependent on the founder. We look for high integrity founders. If anyone has average integrity, it's an easy pass for us. In fact, any red flag is an easy pass for us.
Mhm. Yeah, yeah. And it's really, you're in sort of the matchmaking business. You're not an underwriter of securities per se. So, there's a probably a little different level of diligence than you would do if you were actually in the underwriting business. But uh, and there are plenty of repeat founders in Silicon Valley. I mean, that's a target-rich environment, and there are
Oh, yeah.
plenty of people have track records that you can look at, and so and that's good. Let me just ask. I mean, if you saw 100 companies, how many are you going to work with in a given year? If you saw 100, are you working with 10 of them? Are you working with 50 of them? What kind of you know I would say what's your acceptance rate of companies?
It's probably point 0.1.
So one company out of, or that would be 1%. So you're saying a point. Okay. So is that one in a thousand
It's
you're saying, or one in a
Yeah,
hundred?
one in 1,000. We're in Silicon Valley, so we meet founders all the time.
Okay.
And after this call, I'm going to be going to Berkeley to meet some more founders, and they're just too early for us.
Yeah.
But that doesn't mean we don't want to meet them. That doesn't mean we can't make introductions for them. That doesn't mean we can't help them. We want to start building the relationship with them when investors that we trust are already starting to invest. And when they are ready to raise institutional capital, we just want to be thought of. And if they think of us when they're raising that institutional capital, I'm pretty confident that they'll end up going with us.
Hmm. Yeah. Interesting. A lot of banks are, as you said, more transactional. And if there isn't anything on the horizon in the next 3 to 4 months, or 6 months to a year, it's they don't pay attention. So I understand your relationship bank.
Yeah. Yeah. And, we have a lot of friends that are GPs across the alternative asset classes. So we like finding people that we can introduce to our network. And when they're ready, we will be ready for them.
Yeah.
But the vast majority of people that we talk to were usually too institutional for them. And they're usually, raising, I don't know, $15 million or less. And, in rare instances, we'll help those types of founders, but generally we're working on raising 100 million over the next 1 to 3 rounds.
Okay. Okay. And that's obviously a bigger company.
Yeah.
Interesting. Okay, so fast forward to today. You're 2.5 years in, you're established, things are cooking. What's your vision for the company for the next 3 years? And what are you trying to achieve? And then what kind of impediments do you see that could make it hard to realize?
It's a great question. I would say the first thing we're trying to do is to leverage AI agents to automate more of the debt process.
Mhm.
Right now, we do a lot of debt deals and there's a lot of human intervention. And, before the end of this year, hopefully we'll have all of that automated away. There still is some human element involved, especially when you're talking about loans that are $20 million and above. Um, at that level, people do want to have some face-to-face time.
Yeah.
So that's one. Number two is we started our focus on risk group back in 2009 and have since done, private events all around the world. But the big lesson from doing them all around the world is that I was wrong. I thought there was going to be Silicon Valleys everywhere when I was younger, but once I started going out and investing in these regions, I realized pretty quickly that Silicon Valley is really, really special. And not only that, when we look at our events in Silicon Valley versus other regions, we see 20 times the transactions, we see 100 times the AUM, and we see the quality of founder is much, much higher. So instead of traveling all over the world and trying to do these events in different countries every other month, we really just focused on Silicon Valley because of the quality. And because of that, we've now partnered with the city of San Jose and the Silicon Valley uh, Commerce uh, Division, and we're going to be doing our Silicon Valley Economic Forum for the next decade plus. And that's really just kind of cementing our focus on Silicon Valley, flying LPs out here to meet with our GPs, making sure that we have elected officials so that our family offices can meet them, making sure that we have CEOs of publicly traded companies and their investment teams, think corp dev, M&A, or venture. Um, and then also bringing, unicorn founders together so that they can meet these M&A teams because they could be acquiring the company in the future. So we're really excited about these things. So, automating debt, the Silicon Valley Economic Forum. And then the last thing I would say is we've recently launched our CAGR Club, which is a community advancing growth and revenue. And it's really for our family offices to build relationships with GPs. And then vice versa. It's for GPs to be able to raise from family offices. And throughout the year, we host a number of in-person events so that these relationships can be built authentically. Whether we're doing early morning hikes or sailing trips around the bay or poker tournaments, networking events, everything to build community. I think as AI continues to advance, there's going to be a bigger premium on in real life events. And 10 years ago, everyone thought virtual events was the future because you can fit so many more people in a virtual event. However, how many people have you met in a virtual event that you do business with for decades? Right? That doesn't exist there. You still need to meet people. I think you need to break bread. Um, if you're around other like-minded people, you kind of put your guard down more and enjoy yourself. And I think that's going to have a huge premium going forward.
That's interesting. I didn't realize that you were actually helping the GPs raise capital for their funds and stuff like that, in addition to bringing corporates and funds together, but you're actually helping GPs raise funds so that they can have the powder to actually make the investments. So you're really and that if you bring 20 million to a fund, they're more likely to use you with their investment banking, and that's
100%.
a capital raising aspect that I didn't know you did actually. So that's I think that's very smart, especially with your investor focus, and I think that's very very interesting. And then lastly, you know, you've obviously made a bet on Silicon Valley, to the exclusion not only of the world, but some even other parts of America, because you see the dynamism and you see really the ingredients that you need to succeed. And that's probably, it's certainly borne fruit for a long time, and we hope that it continues to. That's maybe one of the risks of your business model, is that you're very regional. But we'll see how that goes. Great. So, Ryan, if somebody wants to get a hold of you, I'm sure there are plenty of people who are looking for capital or want to hear more about your model and Baird Augustine. How do they get a hold of it? What's the best way for them to get a hold of you?
BairdAugustine.com is our website. They can find a bunch of information about us there. I'm all over social media, so you can find me there. If you look up Ryan Baird or Focus on Risk or Baird Augustine, I'm definitely going to be popping up. Um, and then if you look up Focus on Risk events, you can always catch me in person in Silicon Valley We host dozens of events every single year. And, if you're a family office or an LP or a GP, we'd love to speak with you.
Yeah, that's it sounds like you get a lot of fun activities for everybody. So I think you get some action on that. Well, that's great. Well, thank you for joining us, Ryan, and thank you for the audience for listening. And I appreciate your perspective for entrepreneurs on the show. So until next time, thanks.
Thank you. Take care.